The next stock I'm going to introduce is Palantir. There are three main reasons why I like Palantir Technologies Inc., even though it seems like a heavyweight business at first glance. Plus, Palantir seems to have found a solution to its cleaning problem. I think this explains the current revaluation of the market. If Bootcamp's growth stops or this rumor is false, I would expect the stock to go down again. I also buy into the idea that the company is not reaching its full potential. Because it is the beginning of marketing a complex product in a traditional and fast-paced industry. In my opinion, the value of its products is increased by the availability of AI software of the kind that you and I can talk to, that can understand your goals well enough to suddenly make a product like Palantir useful. Especially, it's very tempting to open up personal or confidential data throughout your company. It is no longer the playground of data scientists and can't be used by anyone unless it's organized. Whenever I listen to someone who works in a large company, one of the first things they worry about using LLMs like ChatGPT, etc., is all kinds of data entry. Another commonly heard concern is data breach, cybersecurity, etc. Palantir is designed to serve the U.S. government, with important internet security. It is difficult to achieve the highest level of security and compliance when these things have to be placed on top of data or AI products. But it is not an important part of the design from the beginning. What's important is that Palantir's year-over-year growth continues to decline. This is understandable because the company has a lot of growth and companies often go public when things are going well. But it achieved a disappointing growth rate, against the background of the war in Ukraine. Recently, income growth has increased again. This could be a glitch in the data. But the reason I think there is reason to be optimistic is that Palantir started the AIP training camp about 5 months ago. They were very enthusiastic about them during a recent conference call. And they may be the solution that the company wants to use to sell its complex product well. Palantir continues to host bootcamps for more than 140 potential customers, with about half of them scheduled for November. They held more training camps than American commercial pilots last year. Stock prices have risen recently. Part of this may be because technologists have recently come together. These bonds are generally considered sensitive and, in fact, long-term bonds have also rallied over the past month. However, I think that the market is experiencing an increase in the margin and income, which is really a strong drink. Meanwhile, Palantir shows a respectable growth rate, but even among the most expensive groups, it is clear that the upper end of the range in terms of price. This means that the market offers prices that, at least in part, increase in growth. On the other hand, it may depend on Palantir's business model and its critical product line. Its products are not easy to sell, but after that, it is difficult to cut. The new marketing approach that Palantir developed through AIP bootcamps is a potential catalyst for the company's growth. Palantir's ability to deliver advanced, AI-led security solutions for traditionally slow-moving industries is more valuable than ever. There is a debate everywhere to remind all kinds of companies that they need to step up their game. Its rating is still high, even among groups that benefit from rich numbers and culture. The company's unique business model, which I believe is known for its customer loyalty, is partly responsible for this. Otherwise, many rely on the continuous flow of new marketing techniques. If this effort fails, I think the title will figure some of it out. Ultimately, Karp said Palantir is eligible to be included in the S&P 500. The next stock I'm going to introduce is Lockheed Martin. Lockheed Martin Corporation has demonstrated strong financial performance in the highly competitive aerospace and defense industry. The company reported an increase in net sales, demonstrating its consistent market presence and ability to maintain revenue in a challenging environment. Although net profit is down slightly, earnings per share shows good financial health and effective cost management. This article continues the discussion from the previous article, looking at the results of the third quarter of Lockheed Martin 2023. To evaluate the financial health of the company, It provides technical analysis to determine financial prospects from a long-term perspective. Lockheed Martin's stock price has reached the expected support level identified in the previous article, suggesting potential growth ahead. Lockheed Martin's financial performance in the third quarter of 2023 showed a changing trend, with significant changes in investment and strategic plans. The company reported that its revenue reached $16.88 billion, a slight increase from the $16.6 billion earned in the third quarter of 2022. This modest growth shows the company's continued presence in the market and its potential to maintain a source of income in a competitive environment. However, net income saw a slight decrease, standing at $1.70, or $6.73 per share, compared to $1.08, or $6.71 per share in the third quarter of 2022. This reduction, although it is small, can indicate a serious challenge of the air. In the security department sector, including possible increases in wages or investment in new technology. Despite this, earnings per share remain stable, reflecting strong financial health and an effective cost control strategy. The company's cash flow remains strong, with operating income recorded at $2.891 billion and net income at $2.527 billion. Although both showed a decrease from the third quarter 2022, this decrease can be attributed to various changes in working capital requirements, especially in the level of product and customer growth. However, generating large amounts of free cash flow reflects Lockheed Martin's strong performance in financial discipline. As explained by President and CEO Jim Teichlet, a key part of Lockheed Martin's strategy is to focus on the 21st century defense strategy. This approach has already led to significant contracts, such as the Air 6500 program with the Australian Defence Force, which demonstrate the company's ability to obtain international leadership agreements and strengthen its position in the world market. The strong compensation of $156 billion strengthens this situation, making the money flow in the future. Additionally, the company's commitment to shareholder returns remains outstanding. During the third quarter of 2023, Lockheed Martin returned almost any free cash to shareholders in the form of dividends and share buybacks. The ability of the company to buy another $6 of common stock, bringing the total to $13 billion, shows the confidence and stability of the company and financial prospects. In addition, the increase in the dividend of one quarter reflects the commitment to provide consistent shareholder value. In addition, Lockheed Martin has achieved various successes in its various business units. These divisions, which include aerospace, missiles and fire control, rotary and mission systems, and space, have different impacts on the company's financial performance. The aerospace segment experienced a decrease in net sales and operating profit, primarily due to reduced activity on the F-35 program. In contrast, the MFC division saw an increase in both areas, resulting in increased activity in its weapons and execution strategy. Lockheed Martin's RMS segment also saw positive development, with a notable increase in net income, which resulted from increased activity in integrated military systems and sensors. Although the sector's operating profit increased slightly, it was supported by the progress of the IWSS program and the start of new projects. On the other hand, the space segment faced a significant decline in operating income. Despite an 8% increase in revenue due to increases in various space programs, the decrease was due to lower profits at United Launch Alliance, due to reduced launch programs. Overall, Lockheed Martin's third quarter 2023 financial results demonstrate a company capable of navigating a complex and competitive landscape. The modest increase in net sales and slight decline in net income reflect the challenges inherent in the aerospace and defense sector and highlight the company's resilience and strategic financial management. A strong track record and significant international contracts, such as the Air 6500 program, ensure Lockheed Martin's strong market position and future acquisition potential. although the performance of its various business units reflects its strong operating style. The company's overall financial health remains strong, as evidenced by its strong free cash flow and contribution to shareholder returns. In conclusion, Lockheed Martin's financial performance in the third quarter of 2023 reflects a company that demonstrates stability and strategy in the aerospace and defense markets. Despite the small change in net profit, the company experienced a slight increase in net income to $16.88 billion, demonstrating its ability to maintain stable income. This, along with effective cash management and a strong financial system, although less than last year, indicates strong financial health. The company's focus on its 21st-century security strategy has helped it win significant contracts, helping to generate strong returns, which is good for its revenue in the future. Additionally, Lockheed Martin's contribution to shareholder value through dividends and share buybacks remains strong. Long-term technical trends and Lockheed Martin stock performance are consistent with past bullish sentiment. After a temporary decline, the stock rebounded sharply, indicating a potential bottom formation and a promising buying opportunity. This initiative demonstrates the company's organizational structure, especially in the emerging areas of cybersecurity and space exploration. The advance on the weekly chart, supported by the rising RSI, reinforces the positive outlook for the stock. Investors may consider buying Lockheed Martin at current levels in anticipation of higher prices.